I will open up with talking about the Leafs and how amazing they were. It's funny. I was actually last night. I went to the UFC event here with some clients, and I made the joke that I was, going with a friend who's a big Canucks fan, and he said, "Well, everyone will lose because that's all that happens in that arena." It's something that we can absolutely echo in Toronto. We won our first round, I think, for the first time in 10 years or something like that. 19 years, yeah. I don't think iPhones didn't exist the last time we won a playoff round. And there was pandemonium in the streets. It was like a parade for beating Tampa Bay. And then we just got the doors blown off us against Florida. So yes, thanks, Taylor. Greybrook is from the center of the universe in Toronto. And I'm lucky enough to get to come out here and see how beautiful Vancouver is. Basically on a quarterly basis. It's factually much nicer than Toronto. Apart from a little bit of rain that you guys have, which I heard I brought with me yesterday. It hadn't rained in 2 months or something like that. So as Taylor mentioned, Greybrook's been around for about 20 years, and we have about $2 billion in invested equity, which translates to about $30 billion in built-out value, with over 100 projects spread mostly around Southern Ontario and the United States. Greybrook started from very humble beginnings. It was essentially a family office. Our chairperson, Elias, had sold TLC Vision, which is a prominent laser eye corrective clinic. He had, I think, 250 clinics across the United States, took it public, and wanted to get into some other types of business and started a family office with our two CEOs, Sasha and Peter. So they started with their first deal, which at the time was in an area called Liberty Village, and I'm not sure how familiar you guys are with Toronto, but Liberty Village is essentially 3 kilometers outside of Toronto towards Etobicoke, so west of the city. And at the time, it seemed like a million miles away from Toronto. This is 20 years ago. And the notion was that nobody would ever go live there. It was so far out of the city. I mean, I live in Burlington, which is 55 kilometers outside of the city, and I go in every single day. But 20 years ago, there was this fallacy that, downtown core people would never go anywhere else. So they built this building with Plaza Corp. It was very successful. It led to 3 other buildings being built sort of right there in Liberty Village. And now if you look at Liberty Village, it actually reminds me quite a bit of Yaletown. It's got a lot of restaurants, very vibrant sort of personality to it. But it is a completely developed, completely populated community and is now part of Toronto. So it just kind of gives you an idea when you look at these things, and sort of often you have to go a little farther out and let the development come to you to really make that value there. So we have, like I said, about $30 billion in completed built-out value, and this is actually 9,000 investors as of yesterday. So like I said, most of our projects are in Southern Ontario, not because it's the center of the universe, but because it really factually meets a lot of the requirements that we see in our development thesis. So it was mentioned, Kyle mentioned supply. There is no supply in Southern Ontario. It is a major problem. I would say it's bordering on catastrophic, the lack of supply. And there's really no solution to it. The Ford government, who's our premier, wants to build, something like 100,000 homes a year, which is impossible. I think, in the last 7 or 8 years combined, we have not reached 100,000 homes. So the notion that we will be able to do that every year is completely asinine. So we focus on that area, though, because it is totally driven by demand. We also like Southern United States, so we have quite a few projects in Florida. We have some value add in Houston, and then multifamily developments in Denver, Atlanta, as well as Florida. So what we focus on as an organization is residential development. Candidly, we don't get involved in any retail, commercial, or industrial. We've obviously given some thought to industrial and commercial over the years. I think we'd all agree that industrial real estate's been going crazy, and there's huge demand for it. But what we focus on is on what we're good at, and for us, that is for sale residential, multifamily, and value add. So I'd say 90% of our business sort of circles in this for sale residential component. We like to find good land, work with good developers, bring projects to market, and sell to end user and purchasers. The multifamily developments is something that we got into a couple of years ago. We work in the United States with a developer called PMG. So famously, if you're familiar with Central Park at all, there's the super skinny building at the foot of Central Park. It's terrifying. I actually went on a tour of it when it was under construction and there was no windows, so you have like a bar, but you're hundreds of feet in the air, and it's so skinny, and the wind moves it. It's a lot. But PMG is a very productive and prevalent developer in the U.S. So with them, we work on this multifamily sort of development, which is society living. So society living, and I think I might get into it a little bit more, is co-living. So it's a value-add proposition, and generally resonates very well in sort of, I don't want to say hipster, but hipster populous areas like Wynwood or Denver, where you have a lot of people who don't necessarily want cars, would rather spend their money on the amenities in their building, and don't really spend a lot of time like in their condo, so they don't want to make that investment. On the value add side, not a huge component for us. Most of our value add business is with institutional partners. So we work with a number of sort of large scale banks on the value add side. And it's something we are investigating and looking into more, and hopefully we'll have something in the next year or so for the more retail component of our portfolio. Okay, so what Greybrook started off as I mentioned, was really a capital partner. So what we were good at was raising capital, and frankly, we like I said, we've raised over $2 billion in capital over the last 20 years, so we are still quite good at it. But over the years, we became much more of an active asset manager, and what that is we're relying less on our development partners to completely execute the projects and more on our internal team. So when we look at a new offering, we look at where are we getting this development? How can we actively manage this development to make sure that it goes from A to B to C and not relying on our partners to do everything? And then, who are our partners in fact going to be? So, when you operate on a scale to which we operate now, we're lucky, we get to pick the development partners that we work with. So we're not working necessarily with mom and pop type operations, which, this economy and recently over the last sort of year and a half have been very hard on. We work with very large scale developers. So as a major player in this industry, we get to see a lot of real estate before it becomes necessarily available to the general public. So we're not necessarily going on and buying properties off MLS. We're bringing properties to market that we have discovered on our own, or our development partners have had generally for 15, 20 years. So these guys are very forward looking and they're very well capitalized. So your Fieldgates of the world, your Tributes of the world, which probably don't resonate with you guys here necessarily, because I don't think we have a lot of crossover between Ontario developers and BC developers, but they are the biggest in Ontario. So they've been land banking for 30 years. Their parents, the Gasparuses of the world, your Green Parks of the world, have been buying land and waiting essentially. And now that the urban boundaries continue to get pushed out, we are able to leverage some of those relationships to bring great properties to market. Like I mentioned, a big shift for us over the last, I'd say 7 to 10 years was becoming asset managers more so than capital raisers. So our asset management team, I'd say since COVID has started, has almost doubled. So we're up to about 30 people in our asset management team. We work in pods, so we have specialized groups for each asset class that we have. So we have low rise, we've got raw land, we've got commercial, sort of within the condo spectrum, and then we've got high rise and mid rise, and then US. So each pod works to actively manage the project. So when a developer comes to us and says, we'd like to do this, we are involved in that decision making. We monitor every decision, every dollar, and that group works hand in hand with the developer. So, when we say it's active, we're literally making decisions with the partner as opposed to just saying, okay, you guys do that, okay, you guys do that. A good example of this is we have a project in Miami, which we raised as a value add sort of multifamily project. It was trending very well, and lease rates were very high. It was getting close to stabilized. But the market kind of turned, and there was a huge demand for condos. So we converted that project through our active asset management. We converted that project from sort of that value add multifamily to a condo project, and it doubled the returns. So the ability to actively go in there and make changes on the fly and have the ability to do that with your partners and not just be a passenger is super important for us. And I think that's what really sets us apart now, especially, is that we are in the trenches with all of these developments. So some of the development partners, again, these may not resonate with you, but generally speaking, what we look for in a development partner is a couple things. So we look for money, factually. They have to be well capitalized. So the role of the developer, beyond actually physically building the project, is they have to guarantee all of the construction loans and any shortfalls. So we do not have cash calls for clients, ever. It is part of the OM. It is not an option. So the developer has to guarantee all loans. So when you're working with a developer, they need to be well capitalized. And this is where I was sort of alluding with how this market has been very hard on mid-level developers. Obviously, interest rates have changed a lot as we learned, and will continue to be quite volatile. It goes for developers too. There's construction loans, there's the cost of materials, there's a lot of different moving parts in there. And if you don't have the financial wherewithal to guarantee and cover those costs, your development will fail. And it's hard for construction companies and developers to go get loans now. It is. So, where your field gates of the world or your Tribute, they can go to one financial institution and get a construction loan. Your mid-level guys have to go essentially make a syndicate of 7 or 8 different lenders, generally not your major banks, but your B lenders like your Firm Capitals, your KingSets of the world, who come in and they sort of compile this higher interest rate syndicate of clients, of lenders, sorry. And frankly, that just doesn't work for us. We need to have the stability of a major lender in place to have that sort of comfort level to go forward with the project. And if we don't, then we simply don't do it. So these are a couple examples of projects we're working on in Ontario. So, they're just fancy pictures, really. These two are in Yorkville, and we're quite happy with them, and we're starting to see this is built, and it's quite nice inside, and these are all done now too. So, just gives you a kind of different look at the different types of assets we bring to market. And, when we talk to clients and we talk to developers, we want to find products that suit their needs from a time frame side of things, from a location side of things, from an asset class. Some people don't like long-term low-rise housing. Some people like downtown condos, and that's all they want to do. And so we try to have a pretty diversified portfolio for those clients. These are our U.S. offerings. So this is done. This is like a real picture. And these 3 are all under construction. This is topped off and people are moving in. So, we're seeing good progress with them. The society platform in general is very exciting and interesting, and we're actively shopping for another one with PMG. So we're looking at Nashville currently as our next option. Again, there are areas that resonate with a certain demographic of person. Probably a lot of them walking around here. And, we'd like to continue that activity, but the one thing that we don't do is we don't rush it. So when we're looking at a project, unless it really checks all the boxes, we simply don't do it. There's really no room for error. So we mentioned Southern Ontario and Florida, and we talked about this earlier. What drives product is simply supply. In Southern Ontario, there's no supply. It's dire straits. We have not too many. We have a lot of people moving to Canada. Our numbers for immigration over the last year are staggering, especially compared to our historic averages. And that's not going to change. We're making up for lost time. We're bringing in tons of new people, and all of these people need places to live. So for us, Southern Ontario checks that box. We need to have markets where we have supply constraints, and that allows us to bring product to market that we know will sell. So obviously we've gone through all the numbers, with Ontario, and you've probably seen it too many times. I don't want to talk about Ontario, but fundamentally this is it. And you guys have the same problem here in Vancouver, obviously, with we have a green belt, you have a mountain range, and then an ocean. But factually, it's the same thing. We have to build within this area, and until the government sort of starts making some changes, which it seems like they are, demand will be very high and supply will be very low. It's just as simple as that. Ontario, and we talked about it, but Ontario's housing situation is not good, which is bad for Ontario, but pretty good for developers. So Florida kind of resonates. Florida's much more of a good news story, and why we do so much in Florida is, obviously very strong tax system in Florida. Great for investors, great for homeowners. There's no state income tax, which is wonderful. I think as a Ontario or BC resident, we would love that. We're seeing a ton of corporations move to Florida, especially on the tech side and the capital market side. So your BlackRocks of the world are moving to Florida. We're starting to see huge asset managers move there. Citadel, Blackstone, Goldman Sachs. So huge groups are moving to Florida. Also, a massive amount of young talent is moving to Florida, which I think we can all appreciate why. It's, again, favorable taxes, you're on the beach, it's a fun place. All of the things that Ontario doesn't have. So, I'd move to Florida. You still have to deal with the sort of Florida people, but, outside of that. You all know what I mean. So Florida's also seen great appreciation in the real estate market. I think in the last recession, 07, 08, we saw some correction there, and it was kind of thought that Florida was a good time state. So when times are really great, everyone goes to Florida, and it's this huge, tourism hub, and it's really all directed by that one thing, which is true. But over the last 10 years, it's really become quite a bit more than that. And we've seen steady growth on every level of housing within the state, in basically every part of the state. So whether it's Fort Lauderdale, Orlando, Miami, Wynwood, we see pretty consistent growth across the whole platform. And for us, when we're evaluating projects and where we want to go, it's one of those areas that we'd like to continue to develop in. So when you invest with Greybrook, and you can talk to Taylor or Austin or Cynthia about this, and they're great partners to work with. What we try to do is, really build a diversified portfolio for our clients. As Taylor mentioned, what we're doing is trying to essentially democratize investing with developers into a more retail component of your portfolio. So I would tell you that this isn't where all of your money should go. It surely isn't, but it's a great place to sort of put a portion of your portfolio where you can predict, reasonably steady growth across a number of different asset classes and regions. So, this is an example of our online portal. So, when we look at a client's portfolio, we say, okay, what is the suitable amount, and what is, the amount that you should be investing or can be investing? And then we look to have a program where we put it across 4 or 5 projects. So what we're doing is staggering risk, staggering returns, and trying to build this balanced portfolio that will end up sort of just becoming this machine that moves. Generally speaking, at Greybrook, most of our clients are repeat business, and that's because we try to diversify across a number of projects. We're not looking for you to invest in one project. We want 4 or 5 projects.
What is GGH?
Greater Golden Horseshoe.
Okay.
Southern Ontario, essentially. So this is an example of one of our offerings. I think it was actually handed out. And the story behind this is actually kind of important solely because it gives some perspective into what we're doing. So this project, Hamilton 3, which is, it's a 7 to 10 year offering, so it's quite long, is a project that we've been working on for 12 years. So this isn't something that we just stumbled upon. We purchased this land many years ago. We are working on it with Tribute, and we simply waited for it to be included into the urban boundary. So when you do this, I mean, there's a lot of work that goes into getting something included in an urban boundary. It's not just waiting, I should clarify. But we worked with the municipality, we worked with the province to get this project from essentially just always going to be a farm into being 1,600 houses. So, what we look at here is, this is the parcel. The urban boundary, I think you could all guess where the urban boundary is there. So for the last 10 years, that was the edge of the urban boundary. This is now the edge of the urban boundary. So the value of this property, just by virtue of zoning, has changed exponentially. And these are the things that we kind of look at when we work with developers. So again, this project wasn't a surprise. It wasn't brought to us by happenstance. It's something that we've been tracking for many years. And the developer, has had it forever. So, we look at these opportunities and we think, these are the types of assets that we want to work with. So this will be a master plan community, again, with huge developments like this. This is a multi-phase, probably a 7-phase development. Tribute, we've worked with Tribute on many of these before, so they have the logistical capabilities and the financial capabilities to do it. So they're currently doing 3 other master plan communities for us in areas you'll never would have heard of, but just outside of Guelph, essentially, in Fergus. So that, and then Colgan, which is sort of north of Brampton, if you've ever heard of those. So we currently have about 2,500 units being built by Tribute right now. So when we look at projects like this, we try to pick the developer that we know can work on it. This is a multi-phase, long-term deal. This is not the type of project you would do with a guy who's only done condos. You need to work with the developer who works on this specific type of project, and that's a big part of our asset management and where we can go. Here's the sort of return profile for it. Again, I think this one's sold out, but generally speaking, we're quite conservative, and we've built in this case, a 1% annual net appreciation, which if it was 3% annualized, it would still not be as high as it was in 2021 from a price standpoint. So we're being quite conservative in thinking that 1% annualized is reasonable. The average townhome in Hamilton was selling for $1.1 million just a year and a half ago, which is crazy. I don't know if you've ever been to Hamilton. Just saying, it's not exactly nirvana, but the idea that homes this far away from major employment centers are that expensive, it's shocking. Now, I don't have to tell anyone in Vancouver about real estate prices, but for us, if we simply get back to where we were, which we are quite comfortable thinking over the next 10 years we will, this project becomes very lucrative, and that's the whole point of it. So that's kind of it. You can talk to Cynthia and Austin and Taylor or myself. I'll be here. But in the meantime, if there are any questions at all, I think I kept it right on 20 minutes, but I'm not sure.